let's get the ball rolling. Okay, so we are going to start for the definition of breaker block. A breaker block refers to a key price level or zone where market structure shift. All right, often marking strong institutional activity. Okay, marking strong institutional activity. It originates from smart money and ICT, which is inner circuit trading concept. All right, this breaker block is originated from what? Inner circuit trading concept or smart money concept. Here is the breakdown. Okay, breaker block is a formal support or resistance level that gets validated and then act as a new zone of interest. It typically occurs after a stop hunt or liquidity grab where price breaks through a key level, traps traders, and then reversed. We are going to explain that in the practicals. This zone becomes significant because institutions or smart money likely use it to enter large trades, causing the market shift. All right, we are going to explain that. So don't forget, it says that a breaker block is a formal support or resistance level that gets evaluated. Okay, all right. And remember, I told you an order block is what is also known as what? A support or resistance level. Okay, dependent. So let's proceed to where we can find this. Okay, now we have two types of breaker block. Like I told you, every strategy has two types. Okay, the bearish side and the bullish side. Okay, so now we have bullish breaker block and what? Bearish breaker block. Very much important. Don't forget it. Okay, now according to the definition, it says that it's a formal support or resistance level, okay, that got what? Validated. All right, turning into what? A breaker block. All right, so now if you can check this side, I told you from here is what? Here is what? Resistance, isn't it? Okay, here is resistance. Now this resistance has been breaking, okay, has been broken, causing market structure shift. All right, causing market structure shift or change of character. Okay, and in the definition you heard it, this, okay, you have to see a market structure shift. A strong resistance level must be broken. Okay, after it is broken, that zone becomes a breaker block. All right, and you have to see what? Market structure shift, declaring a direction. Okay, now this resistance which is being broken, okay, now turns into a support. All right, so if the market comes back here, you don't call it what? Resistance or support. Again, you call it what? Breaker. All right, your breaker zone or your breaker block. Okay, so usually the last candle that was here before the market broke it becomes the block. Okay, the last candle that was here before the market broke it, okay, becomes the block. So that zone, you are going to demarcate that zone, okay, as your breaker level or your breaker block level. All right, in most cases you can see this breaker block as what? As order block. Usually we see this level, okay, this level, okay, this last candle as what? An order block. Okay, so when an order block is valuated, okay, price breaks above it and close with a full candle, all right, then the zone, okay, turns into a breaker block. All right, it turns into a breaker block. Then if the market comes back to tap in, all right, it will push it up. It has a higher potential to push it up. Why? Because this zone was previously placed, the institutional traders placed a large order here, which caused this move to the downside. Okay, so we were expecting this zone, okay, to push the price, reject the price. When the price got here, reject it to the downside. Okay, it ended up breaking it, giving you market structure shift. Okay, declaring intention of what? Bullish. All right, so if the market comes back, all right, since the institutional traders place a large order here, this zone, okay, it turns into what? A support zone. All right, it turns into a support zone and push the price up. We are going to look at that in the chart, all right? This becomes what? A bullish breaker, okay? Like I told you, now if you have your resistance here, or you have an order block here, expecting the price to respect the order block and push down, and at the end of the day, the price end up breaking the order block zone, okay? Creating market structure shift. Trust me, you have to see market structure shift, okay? After seeing market structure shift, wait for the market to come back to the zone, then you execute from this level, all right? So this is bullish what? Breaker block, all right? Now, yesterday I told you we need to see some characteristics, okay? Some features on a breaker block, okay? The breaker block should be broken, the zone should be broken with a bullish what? Momentum, okay? Momentum candle, all right? Sorry. All right? That means if the price should break with a momentum candle, that means the zone, okay, the candlestick that will break this zone, okay, the candlestick that will break this zone, it shouldn't be a candlestick that will close, right, close within for another candlestick to pop up, all right? The candlestick should be what? A momentum. The candlestick should be a momentum candle. The candlestick should be a momentum candle, all right? And you understand what a momentum candle is. If the candlestick that breaks the breaker block is a momentum candle, then this zone, the breaker block, is what? Is valid. You can consider it as a breaker block zone, and you can what? Actually trade it. All right. The second thing that you need to see, all right, you need to see a market structure shift. Okay. Market structure shift. All right. Market structure shift. SS. All right. That is the second thing you need to see. Okay. The third thing you need to see is this zone, this breaker block zone should be found in a key area. Okay. Should be found in a key area. Very much important. Okay. It's going to support your zone. It's actually going to support it. So basically, this is a bullish breaker block. Okay, like I explained, first you need the candlestick that will break the breaker block or the zone should be a momentum candle. All right. The second thing you need to see is market structure shift. Very much important. Why do you have to see market structure shift? Because market structure shift will give you the intention of the price or the direction of the price. Okay, simply mean that the direction of the price. Okay, so that is it, and we need to see it in a key area, which is what? A zone that has been rejected several times. Okay, yeah, it's going to support your entry. All right, so this is bullish breaker block. We have bearish breaker block. Okay, the same thing. Apply this knowledge to this. All right, now we have market went to this way, came back. This is what? Our support level. Okay, our support level. Now, at any support level, we expect the market to bounce back when it gets there. All right. But in this case, the market didn't bounce back. It rather what? Broke it. Okay. To the downside, creating what? Market structure shift. All right. Okay. Creating market structure shift. And from the market structure that we did, or from the training that we have done before, our lessons, I told you whenever a support is broken, it turns into a resistance. Okay, so this support right here has broken, all right, by this zone. Okay, it has turned into a resistance, right? So this zone now is no longer a support, but what? A resistance. Okay, resistance. Now we have this what? Market structure shift. Okay, because this resistance level has broken. Support level rather has broken, and if a support level breaks, okay, it turns into a resistance. So definitely the price is going to reject here. Okay, this has turned into a support, resistance. So if the price comes back, it's going to reject. All right, and in breaker block, it says that when a strong support level is broken, it turns into a resistance. Okay, or it turns into a breaker block. All right, in most cases, the last candle here, okay, becomes the zone that you are going to demarcate. okay, the last candle that the price broke it, all right, will become the zone you are going to demarcate, all right, to this level. So this will become what? Your breaker block, right? And this, most of the cases, is what? An order block. Okay, in most of the cases, this is an order block. All right. So if an order block is being broken, okay, all right, then this order block becomes what? A bearish breaker block or a breaker block. Just put it that. We have our market structure shift here. Okay. What we need to see the features. Okay, market structure shift is done. All right, this side. Okay, and the candle that breaks it, the candle that will break the zone should be a momentum candle. Okay, it should be a momentum candle. All right. Then we have our market structure shift here. Okay, if the candle that breaks it is not a momentum candle, the breaker block is not valid. Okay, it should be a momentum candle, right? If the market rejects, okay, maybe gets here, close within, gets here, close within, and finally broke it, all right, it's not a valid breaker block. Now, check this. Okay, we have this diagram here. All right, so what do we see? We saw this here. We saw this momentum candle, okay? And behind every momentum candle, okay, the candlestick behind it is an order block. So we have to do what? Demarcate our order block zone, okay? From this level to this level, okay? That is the green line. And what makes it a valid order block? We have market structure shift here, or break of structure, sorry, BOS. Okay, so this BOS makes this a valid order block. Okay, so why now if this is our order block, okay, and the price has gone up, we should expect the price to bounce back from here. Okay, we should expect the price to respect this order block and begin to push up, isn't it? So this is a valid order block. Now the candlestick got here, all right, we are expecting it to bounce back and push up, but it got here and violated the order block. Okay, it violated the order block, closed below it, okay, and created a market structure shift here. Okay, all right, it created a market structure shift. And look at the candlestick that broke the zone. Look at the candlestick that broke a zone. It's what? A momentum candle. Momentum. All right, it's a momentum candle. It makes this zone a valid breaker block. All right, and the next thing, the breaker block should be found in a key area. All right, key area. Sorry. Now look at this. This breaker block is also found in a key area. This zone is a whole rejection. Okay, this zone is a whole rejection area. Okay, so at the end of the day, if the price comes back, it's going to repeat the same behavior here at the right side. Remember, I told you guys that whatever happens in the past, okay, has a higher potential of what? Repeating the same pattern. All right, so this rejection right here is going to what? Repeat itself. So at the end of the day, if you use this as your breaker block, you make entry from this level, okay, and target down, and you can see what the price did. The price actually came, respected it, came down here, came back again, respected it, and pushed down. All right, this is breaker block. So anytime you have your order block, all right, expecting the price to respect it, and at the end of the day, the price end up what? Violating it, right? Don't waste that order block. Okay, use it as a breaker block and trade it. It helps a lot. Okay, so now I told you, if an order block is violated, it turns into what? A breaker block. But don't just trade it. You have to see certain things, okay? Some features, all right? First of all, the thing you need to see is market structure shift, okay? Declaring what the intention of the market to push in declaring the direction of the market, okay? After that, the other block zone, the candlestick that broke it should be what? A momentum candle, all right? And the other block should be found in a key area, okay, to support your entry, all right? These are the three major things that you need to see in order for you to consider an order block a valid order block, okay?